This is going to be about taxes, so if you're really not interested in taxes, it will be fun. But I will tell you, I've been voted the most entertaining tax CPA here at Minibar like 6 years running. Now that is, of course, usually after the alcohol and the open drinks go, and usually the running then starts there in the election. So it is really pretty quick, and what I'm trying to do is get a whole decision and a business model put together on how you approach it and what you need to do. So the first thing, if you're going to have value, is I want to have interactive, and feel free to ask questions anytime you want, but it really is interactive, and it really is how do you structure your business. Now the first step is always describe your business and your plan. What problem are you solving? Who are you going to serve? What's your customer? Because it all depends. And what is your end goal? Now, a CPA business, I can tell you the CPA business is really great. We've been around for 150 years. Our model is very simple. We provide a service to you. It's a tax-free service in Minnesota. It's not a tax-free service in that. It's a sales tax-free. I charge per hour. I have fixed rates for the tax returns and work that I provide. It is a service business. I end up making X amount of dollars. Anytime I hire somebody, I need to make 4 to 5 times their salary, total salary and wage, so that determines what their billable rate is, and it should be comparable to my billable rate and their knowledge. So I know that you, just a starting out accountant, I know I can charge $75 to $80 an hour for your work doing tax returns for people. As you get more and more skilled, to get up to the $300, $500, $700 an hour range. Some of the stuff that I do in the R&D tax credit, the cost segregation studies, those things add significant value to businesses. I charge a lot more for it. So simple. But every accountant, if you meet a CPA, you say, how do you get to that level to be that invaluable? You can't charge that all the time. You don't have enough clients, but you have to be invaluable. So I understand the business. I also stand, it's going to come through to me. I want to have a pass-through income, so what happens is I get to deduct my life. What does that mean? If any of you have been to my seminar, I dressed up as a pirate about 5 years ago, came in here full pirate costume, had pirate stuff. That was my Halloween costume. But it was my Halloween costume after I bought it and wore it here and deducted it in my business. We recorded that as well. So if you ever want to see it. But I think that's been taken off YouTube because many of the laws have changed and it said, oh my God, if you follow tax advice from this guy who's dressed as a pirate, you are truly going to go to jail. So I always say, always find a good advisor. But with that business, I know what it is. I know that I'm going to go pass through. I want to deduct my life. I want to deduct my vehicle. I want to deduct my spending. I would like to go to Colorado. I can go to a CPE, continuing professional education, about taxes in Colorado. They happen to ski there. Am I going there to ski, or am I going there to deduct my life? So what happens is your business is there. A business also cannot be a hobby. That means it has to be a for-profit motive. I make enough money to be profitable and pay taxes. So you have to be able to focus that. Now, if I'm building a company that's going to be scalable, that's going to sell software as a service, private equity is going to come in there, I might want to be a C corporation. So you have to choose and define your business. So once you do, you choose your business type. And a business type, it's pretty simple. Self-employed, Schedule C, it adds onto your tax return. You're going to pay the most tax. You have the most risk. Why do you do that? Because your business and your personal life are intermixed. Your house is at risk. So if you are a Schedule C Uber driver, you're not getting a 1099, you're doing that, and you crash your car or you hurt somebody, they can come after and grab your personal assets because you don't have a protection, a corporate shell or protection. So that is the simple one. That is what I would always say. My Mary Kay sellers love people who business, love people entrepreneur. They sell Mary Kay, that's usually a Schedule C. It's not worth for them to do that. They want to buy some product, they want to have their neighbors over, they want to sell that. So it's a good program, it's a good way to get started. All right, partnership 1065. What, Eric?
Yes.
Hey Eric, how about you and I get together? We're going to actually charge Best Buy to pick up this place afterwards. They're going to pay us $500, we split. That's a partnership right there. Verbal agreement is a partnership. They have to form and pay a 1065. Here's the revenue. We'd go try to get a federal ID number. Otherwise, we cause chaos for the Best Buy paying people because they want to know who they're paying. So we would do that. That's as simple. That's a partnership agreement. Same thing, no corporate protection. A lot of real estate deals were partnerships. Polaris, if you remember that, that used to be it used to be a limited partner, general partner. A lot of organizations were partnerships. But the problem is, when we became litigious, that means we needed to build some shells because both of our personal assets were at risk. So then we go into corporations. That's it, corporations. Here's the number one rule. Corporations are just an entity we create. They're a living, breathing thing that you put into it. The first entity that was ever, they call it 1120. 1120 is the tax return. It's just a standard C corporation. Best Buy is a C corporation. Most of the publicly traded companies are C corporations. There's a reason for it. Then a new one created called a B corporation. Well, B is benefit corporation. The purpose of the corporation is not only to be for profit, but to give away that profit. So many, Sparkle, if you have Sparkle AI, they're a B corporation. Their goal is to make money and then give it away. So it's a noble profession. It's a good way to, I would say, feel good, follow your heart, and form a business. S-election. So in the S-election created in '86, just as I may have given you the reference, the S-election was created to pass through corporate protection, pass through income. S-elections have criteria to it. You have to be a naturalized human citizen. You can only have 75 people in it. It was really the small business election. Huge amount of companies are S-elections. You don't see them as much anymore. I did one in 2017 for myself because it's fun. There's a great benefit for it. You get to pay yourself a salary, but your whole wages don't get taxed as Social Security income. Now you have to pay yourself a reasonable salary, so I said if I was to hire a CPA who did what I did, it would be this amount of wage, and I don't have to pay on any of the profit. That's a distribution. So there's a good benefit for it. There's some negatives to an S-election. There's some negatives to that. It's difficult to buy, sell, merge. It's difficult for somebody else to buy because of different rules. But it was a great tool that was created in '86, and when people tell you corporations don't pay their fair share, that's what happened, is they actually switched their company to pay it at their personal level. Because at the C corporation, you have a double tax. You're taxed at the corporation level. If you dividend to yourself, you pay tax again. S corporation goes all the way to your personal income. So whenever you see that graph and that line says, hey, corporations used to pay a huge amount of salary, now they don't. Well, in a C corporation, a person would just pay themselves $1 or a couple of dollars salary, and then they would loan themselves money. And so I didn't take a salary, I just loaned myself $1 million a year for the last 10 years, and I'm paying interest on it. So there's different ways of going about it, but it was a great way for the government to get money, is to pass through to the individual. Then there was created a limited liability company. That's the same thing as an S corporation, but they really simplified the rules. They made it more flexible. This is great for real estate. This is great for many types of organizations. If you're passing through an entity, if you're doing a startup, the 1065 election, LLC, great way to do it. I've done this in 24 minutes. So when somebody comes to me and goes, oh, Lee, I'm thinking, I have a great idea. Great. What do you want to do? I'm going to do this, this, and this. Let's put it in an LLC right now because you're going to start tomorrow. You're going to have a shopping cart. You're going to have a website. Let's put it in an LLC and get it started right away. And 24 minutes later, because it's all automated, it's done. Getting a new bank account takes 3 days because you got to show up with your driver's license. You got to show up with these documents. You got to show up with everything because of Know Your Customer. But then the last thing is you can take this 1065 and do an S election on it as well and have the same benefits that there are. Then the last organization are nonprofits. So many businesses that I meet with are nonprofits. They just happen to not realize it. They have a great idea. So I always like to say, let's just not really structure this and let's figure it out. Let's rework on the business for a profit motive. Because on a nonprofit, I've done this as well on a farm. We turned it into a 501c3. I now get a tax deduction to donate to it because it's never going to amount to anything. And taking a farm from the 1800s and bringing it to the 1890s is not really going to ever be profitable, but it's a tourist attraction on the side of the road, and they sell some knickknacks. Well, the knickknacks then, see, they pay tax on that. But restoring the farm and getting that all back was kind of a fun little nonprofit organization. So, what do you want to do? Where do you want to get there? Do you need benefits? Do you need health benefits? Are there going to be employees? And what are the risks? So I have this as that he's 17 now. He's my employee at my S corporation. Now, what is the standard deduction for an individual? What they can pay without paying any tax? All right.
$6,000.
I'm going to say 16 grand with an IRA, okay? Because it's 4 grand with the IRA. So he earns 16 grand a year for being my tech, IT, answer my phone, update my computers, run the network, do all that stuff. He gets 16 grand. He files a tax return. He gives $4,000 to an IRA. $16,000 is his standard deduction. He has to pay FICA on that 16 grand. Now that sounds great, but when he pays FICA, after 40 credits of FICA, he qualifies for disability. By the time he turns 20, he'll be fully qualified in the Social Security Disability Program. Anything happens to him, motorcycle, skateboarding, anything, guess what? They get to pick up the tab because he's already qualified. So it's a good program to take your kids if you do this. Now this is not about, oh, I'm going to scale a business, I'm going to do this. This is about a lifestyle business for me. But I'm able to take 16 grand and make it tax-free. I'm able to get him to work. I can get him to build PowerPoints and structure. So there has to be business. It isn't like, oh, he shows up. And he shows up in my advertising and marketing. So when the IRS goes and says, hey, did you see advertising and marketing with Lee's son in it? Yeah, and Lee's, it's Lee's employee. So there he is pointing the way. So these are the structures that you have to think about when you're going to build your business. And this takes time. Once you do this, you can't do this. So when you build a structure, federal ID, easy, online. You can only do it once. Don't go show up with your 19 federal IDs, one a day, because that's what usually happens. I got 9 of them because I created this in real estate. You get 1 a day. You can do it online. Takes about a minute and a half now. And Secretary of State, register your business. You've got to get an LLC paperwork. The LLC paperwork, you can find it online. You can go to lawyer.com. Your friend probably has it. If you have a document, find and replace their name. 90% of it will work. When you talk about spending $5,000 for a lawyer to set up your LLC, because my lawyer's not here, that you don't need to do that. $50, $100, you can get a form. It will work. What you're not really trying to do is if someone's going to sue you, then you might want to have the lawyer look at it. But for all the standard LLC document will work. $50, you can get that, put in your name, whatever your name is, check with the Secretary of State, it's an available name. If you put Best Buy as your new name of your business, eventually Secretary of State will say, nah, we got that one covered. So then you go into the Department of Revenue, you get your form. The only big caveat on the Department of Revenue is now you're on the time. You've got to basically, you've got the federal ID, you're going to have to file a return with them, you're going to have to get a CPA to do it. Even if it's zero activity, you got to send them a return, otherwise notices will start coming. State of Minnesota, they're going to start bugging you for, hey, did you get sales tax? Did you do this? So you've got to make sure you've got that document up. The only other real criteria of a legitimate business is a bank. You need a bank account because if you put an LLC, you have to separate your life. If your life is merged in, you're breaking that corporate shell. You're one entity. You're defeating the purpose. The IRS is saying, hey, wait a minute. We can't determine what is business, what is personal. Yep.
I don't know if you'll cover this, but like, does personal loans to your business bank account count as piercing the corporate shell?
No, just write it up as a document. Okay. I'm loaning this money. If it's over $10,000, the IRS says charge the federal funds rate. That is like the short-term rate's like 1%. So usually as an accountant, and I go, you have $500,000 that you've invested into your business and it's a loan. Let's just make sure it's documented. Let's make also sure it's secured, because if it's an unsecured debt, guess what happens? Your payables go up before, so you want to make sure you're in good position. I also make sure it's convertible, do some other things that you can at some point turn it into equity, because maybe that makes more sense. Basis and deductibility needs to make sure that it is a basis loan or a basis deductibility. Some loans are not. You want to make sure they are. Equity always is basis. That's a high level thing. It just means deductibility. How can I deduct on my tax return? If you don't have the assets or basis to deduct it, it's stranded. And so you always want to make sure that you can deduct your losses and plan accordingly. So I always look at what do you need on the tech stack. You need accounting software. So you can go free. QuickBooks for $120. It's a great program software you put on your desktop. Their ending life of it, because the software as a service, QuickBooks, is $70 a month. So $120 for a software you don't have to update for 5-6 years, or $70 a month. Well, I've been a QuickBooks fan, been a QuickBooks certified instructor. I have implemented more companies on QuickBooks, and Intuit is the devil when it comes to, we got you. Now we're just going to start gouging. It just takes them 20 years to do that because they're dealing with accountants. But Xero, there's other free accounts. It's just a way to separate your life and you merge your bank account. Reconciling your bank account is probably the key that you need to do to run a business. And why you do that is because now all your transactions are in there, you reconciled it, you've got everything you need in there, and then your accountant or somebody can say, what's your profit and loss? Did you make money? Did you do something? What are decisions? What were the results? You put $400 in Facebook advertising, what happened with it? Because that's the core is everything comes from your financial statements.
Is it wrong to just put everything on Google Sheets?
You can do Google Sheets as well. I mean, but you need the template. And when you look at, my wife runs a personal budget on Google Sheets. If you really want a tech stack that you're going to have to do a tax return, it sums it up. It's able to do that, and it goes into the boxes it needs to.
I see.
So when you go in and say, you come to me and now you give me Google Sheets, I now have to sum that up, and I charge a lot of money for that.
Right.
So it's
if I
like,
do it myself, then
but if you do it
that's
yourself,
up to me.
yep. Now here's what the accounts are, and here's how the summed up. It depends on how much time you want. You can write a check in QuickBooks in about 12 seconds to just do a check, then manually write it into an accounting system.
Yeah, okay.
Takes a lot more time. And the reconciliation on QuickBooks, you link the account, reconcile. Guess what? It's clicking boxes, and it's like it's reconciled. It is the greatest thing that has ever happened. I used to spend 8 days reconciling HEI's bank account every month, because that's how many transactions it is. Then it's like, oh, we got SAP, we uploaded it all. It was like, that was just done in 5 minutes. I must be wrong. And it was like, this is the greatest thing ever. Yes?
Doesn't the IRS allow a couple of years for a startup to show income?
Yeah, absolutely. You don't have to show income for all your entire life. You have to show a profit motive. And so if you go in to say, hey, I'm doing an R&D development and I'm building really good stuff and it's going to take me years to do this medical device, takes 10 years to get an FDA product all the way to market. You're not going to get revenue for 10 years. But I have a business plan. I'm achieving profit, and then there's an end result to it. So there have been companies, a wireless company that has lost 20 years in a row. But every year there was something new. And I remember the one year that we worked on the audit, we got something new this year. We're refocusing. It's going to be great. What are you doing? We're giving Kevin Garnett $1 million to walk around with our phone. I said, that's a cell phone? That's what you're doing? That's the greatest marketing ever. So the IRS doesn't care if you do foolish things with your money. You need to be profitable. And they literally did give Kevin Garnett $1 million and gave him a phone to walk around with. Because naturally, Kevin, you got a phone in your pocket. Which one are you using? Oh, I'm using these guys. That's great. That is really, doesn't matter what your business is, it's you have a profit motive that you're going to get money. If you come in and, now, let's go back. Thoroughbred racing, biggest money losers ever. No one makes money at it. The IRS has never gone after them. Why? Because we might win the Kentucky Derby. I spent $7 million on my horse, my breeding, my farm, my hay. I got trainers. I might win the Kentucky Derby. What are the odds? Probably not good, but it gives me somewhere to go in May, and I get to get drunk. So it's worth $7 million a year to me, and I get the deduction on my taxes. It's a completely separate business. So when you go into the front of the IRS and go, our goal is to completely lose money and never make a profit, you're going to get disallowed. If you go in as a hobby, I only spend 10 hours a week looking at that, I don't do that, I buy this, I trade, I do this, they're going to say it's a hobby, you don't have a profit motive. You go to your kid's basketball game and you sell t-shirts there that say, my kid's the greatest, my kid's an honor student. They're going to say that might be a hobby because you just took the $40,000 loss and your kid's going to basketball camps all over that you're deducting that. That's a hobby. You're just chasing your kid and deduct chasing your kid on all their camps. So you got to make sure you have a business motive. Payroll, I always do payroll for free or gusto. There's tons of them. ADP, you used to spend them $60,000 a year. I went to Gusto for about $6,000. Payroll for free, the guy literally built a payroll stack for his wife. She's in the hospital business. They were just paying a ton of money. He just built it, and he just gives it away for free. Do your payroll, but if you want to add on services, it just calculates your payroll. It just does it. If you want to add on services, pay me. You have to file your own 941. I'll give you the form. But if you want, pay me. I'll do it. It's really affordable when you think about a startup. If you have employees, most places have one employee. If you're an S corporation, me, I have two, me and my son. Domain, I was like, email Google. Get yourself your own domain name. I deal with tons of people. That's the number one thing the IRS will look at and say, where's their website? Oh, they're using an AOL account, a Gmail account, or whatever for their email. A for-profit motive is you at least invested in the minimum and you went on the website, you got an email. That's the first thing I tell people, because the first thing the IRS does is, okay, you're audited. I don't see you on anywhere. Well, I'm in stealth mode right now, and I've deducted $100,000. Well, why wouldn't you say I'm in stealth mode and I deducted 100, but here's my domain name, here's my email address. Very cheap investment. And I will tell you, if you're going to raise capital and you show up with no website, no domain, no email, then no one's going to pretty much take you seriously on that. Website, I use OnStack. I always do Atlassian demo, probably put all your information in there. They've raised the price, but the Confluence and Jira tickets really get things organized. That's usually where I use with my clients, some kind of stack. Look, I'm going to set up my own Confluence page. You're going to get Jira tickets on what information you need to load. I'm going to do tickets. I'm going to reconcile your bank. I do that with my nonprofits as well, is just to say I'm organized and I'm going to do that. So now we get into where you guys walked in, the tax overview. There are over 3,000 jurisdictions in the United States that have taxing authority taxes. So what happens is you're going to do it wrong. There's no question you're going to do it wrong. You're going to do it wrong. Now here's the thing. The intent is half the battle. Get to where you need to be. Don't cheat. Say, I'm going to do the best I can, and you're going to win. Okay? And when I say win, just means you're not going to go to jail, and that's winning. So what happens is, first of all, we're going to talk about sales tax. Sales tax in 2017 changed dramatically with Wayfair. Now, previously, sales tax, you pretty much, I'm in Minnesota, you're in Minnesota, we're at the Best Buy store, I sell you something, I charge sales tax. Pretty simple. The guy in Iowa said, hey, I can email you, I can mail you this cell phone cover for $8. You don't owe sales tax. I don't owe Iowa sales tax to the guy in Minnesota, so he was mailing it. You bought it online, you bought the product, you wrote sales tax. Now, people like Best Buy said, that's not fair, which it is not. So a company like Wayfair, and there were several others, who basically created and did huge online shopping commerce. South Dakota said, hey, not fair, you have to charge sales tax to anybody here, even though the law says use tax is in play. Everyone in South Dakota who used Wayfair owed use tax. You owed use tax in Minnesota, but unfortunately 95% of the people did not comply with the use tax laws. I am one who did. And you know how I did it? I would just send them, the state of Minnesota, $300 to $500 every year, just said use tax. Had no clue if it was right or not, but my wife lived close to Superior, Wisconsin, and would stop at that Home Depot. And I'm never going to go to Wisconsin and say, I need that sales tax back because it was used in Minnesota. But instead, I'm just like, I want to be fair. I'll just send Minnesota a random check for $300 and see what happens. You know what happens? They usually sent it back going, what's that for? I said, use tax. Well, what'd you buy? I don't know. But I'm pretty sure I owe you some money because my wife was in Superior, Wisconsin. I drank in a bar there. I'm pretty sure that the P would have been in Duluth. So I don't know where the law changes.
Right, so I'm sorry, but I guess I just don't understand. So you actually are supposed to pay the state of Minnesota if you bought products in a different state?
Yes, that's called use tax.
Oh, yeah, okay, I've never.
We'll edit that out. Of course you knew that. Here's the thing, yes. But there is limits. They're saying, hey, guess what? We have exemptions. The sales tax in Minnesota is one of the most complicated things ever. You're a dog groomer. You groom a dog. That's great. Here's my dog. Groom my dog. You charge me sales tax. You groom thoroughbreds. Here's my thoroughbred, my $7 million that I deduct every year. Can you groom that? Yeah. There's no sales tax on that. Well, can't I just call my dog a thoroughbred and bring him over here and get sales tax? Yeah, you pretty much could. So the sales tax law is very complicated. It's very specific, but you wouldn't know your use tax that, oh my gosh, my thoroughbred cleaned my horse and washed my horse and my dog, and I owe use tax on that. So people didn't know the laws, and people didn't care about filing it because they didn't prosecute them. When you see a garage sale, do you walk in and go, oh, by the way, are you charging sales tax on that $3 for that picture that I'm buying from you? No. Well, you should, but there's an exemption for garage sales. But when you look at how the garage sales are organized, how you do that, you go walk by that lemonade stand. I'm going to tell you, that woman there is breaking the you should go right up to that little girl and say, hey, I know it's $1. Here's $1.08. Put that 8 cents, send it to the state of Minnesota, please, because I want to comply. That is where we get into a lot of problems. Now remember, there's 3,000 jurisdictions in here. So with Wayfair, the streamlined sales tax, the green states, really cool. Hey, we all want to be on the same page. They jumped on board and said, we have one simple filing. As a matter of fact, if you use Avalara, TaxJar, or anybody else, we'll pay for it. You just send the data, you calculate it, they file for free. These other states, California, Texas, Florida, we don't want to join the group, Illinois. We're big. We're still going to charge people, so you have to comply with that. Now, economic nexus is different in every state, but it pretty much is if you have a significant amount of transactions in the state, over 100, if you have over $100,000 in every state, you should look at that you probably should be charging sales tax to those people in that state. Huge penalties, huge fines. Texas, I had 7 years ago settled for over $300,000 on a company with $6 million in revenue, because they're not nice. Illinois, software as a service company, I settled with $20,000 in an offer and compromise. We'll just give you $20,000. They came out 90 days later and said software as a service is not taxable. I said, oh, well, we thought it was, the digital. Yep, we did. Can I get my money back? No, that was an offer and compromise, so you wouldn't go to jail. But you don't tax it. Once again, don't you know what an offer and compromise is? I was like, oh, good. Can I get out of the card, get out of jail? But these are those things that you determine. I have a beautiful sales tax audit going on with Illinois right now, and they refuse to come on site to audit our books. And we refuse to go to Illinois to give them their books because that creates physical nexus versus economic nexus. So they have to give us a waiver to say we will not create physical nexus to go give them the records of economic nexus. So there is some fun stuff with sales tax. It's an advanced course, but just be wary of it. Payroll tax, FICA, this is why I tell it, if you do it yourself, you have one employee, that's great. There's tons of forms, 940, 941. Sign up for Gusto, payroll for free, they'll tell you what to do. But you always, if you withhold money or you owe taxes from people, you always pay the government. You will be held personally liable for not doing that, and you will go to jail because those are funds held in trust. So that means they're not your money. And the IRS considers it their money. So whenever you take money out of somebody's bank account, oh, I can get an extra week out of it. I can do whatever I want with it. I don't really have to. It's held in trust. Give it to where it belongs to. Because if you took it from your employee, I guarantee you something, it should go to whatever home, whether it's medical, whether it's dental, whether it's the IRS, whether it's the union dues. Pay with whatever you got right away. Thank you on that. All right, so quick on the 1099 compliance and reporting. At the end of every year, you have W-2s, you have 1099 compliance. The 1099 has miscellaneous. Used to be a $600 threshold, but lawyers changed. Lawyers cheated so much. A few years ago, every dollar you give a lawyer, you have to give a 1099 to. 1099, miscellaneous, little lawyer fee, whatever you do. So that's the fun part. So you're always going to have to do it because you should always have a lawyer on standby. You should always give money whether you organize a corporation. Next thing is 1099 miscellaneous, 1099 NEC. NEC is non-employee contractor. Where most companies get involved, what's an employee versus a contractor? There's a whole laundry list. But pretty much, I'm a contractor, I'm a CPA, we've all understood this. Technology people, they're contractors most of the time when you hire them, but you can't tell them what to do. They have to provide their own tools. You can't really do a lot of stuff. There's a fine line between contractor and W-2. It crosses. California said all Uber employees are W-2 employees. Why this is a huge difference is that if they truly are reclassified as a W-2 employee, you need to withhold payroll taxes for them. There's another big problem. If you have a 105 plan, I have a 105 plan with Remington. Remington is my, buy and sell company. I buy stuff and sell stuff. My wife works for it. Do computers, copiers. Has a 105 plan. What's a 105 plan? You ever had a health insurance? The 105 plan says all health expenditures are paid for, deductible. Everything by that company, any health care you have is 100% paid. It's a benefit for the employees, beautiful for a C corporation, only a C corporation can have that. So she goes to the doctor, she pays our insurance, she pays our premium, she goes to the dentist. It's all deductible, 100%. One of my contractors gets reclassified as an employee, I have to offer that benefit to them. I have to go through the withholding. So you have to make sure you specifically align. If you go and down these paths and these fun little tax codes, you have to make sure that everything is aligned. So the 1099 compliance, I always say 1099, it's over $600, you have to give it to them. I always say plan on doing that to every one of your contractors. You get their W-9, you say, hey, you're going to get a 1099 from me, so at the end of the year, I'm clear, I'm free and clear. Because if you come back and say, no, I was an employee, I've been through this many times, I was an employee, he laid me off, I wanted unemployment insurance. Well, I've given him 1099s for the last 3 years. How did he become an employee at this point in time? Well, because I didn't have any work for him anymore. And so now he's saying he's an employee. Well, he brought his own tools, he bought his own equipment, he filed his own tax returns because I did his tax returns. He bought his own computers, he deducted them. So really doesn't hold up well when your accountant is the guy who you're trying to get unemployment from. So now we go into kind of the history of the tax return. Now we're moving into income taxes. Now the income tax philosophy, and this is me speaking, we have another CPA in the room, but I just want to say the income tax philosophy, previously we taxed people to pay for things. The income tax was first introduced in the Civil War, and that was to pay for the Civil War. In the modern times, we have changed the tax code to reward people and penalize people. It is not to pay the government. We have deficits, we've had historic deficits, we have added. We don't raise enough taxes to pay for what we spend. So this becomes winners and losers. When the tax code was really introduced in 1909, really implemented in 1913, that's the first tax return up there, we reward farmers and housing, real estate. And the reason why, they feed us and they house us. Then approximately the 70s, the 50s really when we started talking about innovation, the World War II, guess what? We reward innovation. So the tax code rewards those three things. And when you say rewards those three things, those are people that have a lot of options to not pay taxes by investing, reinvesting, deferring, other things that are in there. And when I say that, it's just the fact. 94% of the people surveyed by the IRS said everybody should pay their fair share. And it's like, yes, that's great. That's stupid, but that's great. Every fair share, pay your fair share. But if I'm a farmer, I'm not paying anything. My goal. I worked 687 farmers' returns in early 90s. They pay nothing. And here's why. On December 1st, you walk in, and I have $150,000 worth of income for the year, and they say, what are you going to do? Okay, well, I'll buy $100,000 worth of fertilizer. I'll buy $50,000 worth of seed. I'm at zero because I just wrote the check. I'm at zero. But Lee, you've got inventory. Nope, there's no inventory. You've got grains full of silos stuff. I haven't sold it. All right, so what do I need to do? Well, pay your wife $20,000 in wages for all her hard work because I can pay my kids and whatever. But so, hey, Eric, we're married. Here's $20,000, but I'm not paying you wages. I'm paying you grain, in-kind wages. No FICA tax on it. So now it's like, okay, you're at negative 20 grand. Oh, that doesn't work. You need to sell 30 grand. It's December 15th, sell 30 grand worth of grain. Okay, I need to sell 30 grand worth of grain. Bought, sold, here. We already have it in our bin. It's now ours. So now they won 30. So now I made 10 grand. You know what the earned income tax credit, I have 2 kids, is 10 grand? Maximum. I get a $6,000 check from the federal government. I get $2,000 from the state of Minnesota, $8,000. What do you mean, Lee, my tax return's $1,200? Oh, okay. Did that 600 sometimes. Then there's different ways of doing it. That's the way farmers work. Real estate, depreciation, cost segregation. Got to know Best Buy quite well. Best Buy CEO comes from my alma mater. She's a Benny, and she's she started 1 year after I left. So you talk about really good accounting. You know, I'm telling you, we can be CEOs of publicly traded companies. I couldn't, but she could. So I'm pretty impressed with it. But when they started doing the rapid build, they put every one of the buildings as one building, one asset. We're building, just build, build, build. They paid Accenture tons of money to come break them down. You know why? This is deductible. This wallboard's deductible. You can accelerate the depreciation. You can accelerate the research. This carpet, you can peel up and take off. It's deductible. So what happens is in a cost segregation study, you're able to break down your real estate, depreciate your assets faster, save 40%. Huge savings for real estate and building booms. They went back and broke down, oh, these are racks, these are not fixtures. There really isn't a lot of things that are permanent in structures because the depreciation is lower versus a fixed wall. That's a 39-year life versus this board is a 7-year life. This digital electronics, 10, 20. I mean, so what happens is you break it down and you can do this after the fact. You buy the building, they went through, and they're able to depreciate it, save a ton on taxes. Why? Housing, real estate, very good for the economy, building construction jobs. So they do that. It builds infrastructure. So then the last one is tech and entrepreneur. And I want to talk about research and development credits. Why? Is we found out that if we are not innovative, we will die as a country as the world's leader. Whether it's medical devices, whether it's technology, whether it's anything, agriculture, implementation. The mines up in northern Minnesota, pretty much familiar with, but they had 5,000 people at LTV producing the same amount of tons. 10 years later, they had 1,400 people producing. That's innovation. And that's an industry that wasn't really innovative. Talk about taking that innovation. We invented it. We did that. We had carbon credits. We did everything we could to do what we needed to innovate. And it's the research and development tax credit. The research and development tax credit, about 90% of the money that people take on it are big companies. 3M, Monsanto, medical device companies. And the reason why they do is because they made it so complicated that you need to have the army of lawyers, you need to hire the guys from the IRS to do that. Well, when they did the R&D tax credit, they did it basically for manufacturing to innovate. When technology happened, it became a boon for technology. So the independent guy that was building it, it just is, how can we build this and structure it to make sure that we can follow the R&D tax credit? It can be up to 20% of the money you spend, but for the most part, because of factoring, depending on history, it's about 12% of the money you spend is a direct tax credit onto your taxes. Carry forward, carries personally pass-through losses. Minnesota has a 10% adder on it. So if you spend $100,000, 12,000 of it is like you paid your taxes. That is individually to yourself. And then you add another 10,000 in the state taxes. So huge benefit to do this. One of my clients came to me, I work with tax preparers, I work with 28,000 tax preparers, and so they go and say, I think he has the R&D tax credit, can you look at it? Yep. I amended, so the guy makes about $1 million in revenue, makes about $120,000 a year profit take home from his company. We got him $150,000 back in a 3-year amendment take home. And to this day, he pays very little taxes because it's all in the R&D and the development of his software. And really, when you look at it, he can reinvest that into his company. He can reinvest that into marketing. He can grow his sales. He can do that personally to do other diversify his investments. So that is why the power of the R&D tax credit. So now when you go and say, but Lee, I'm a W-2 person. Somebody's got to pay. Did I tell you, if you're a W-2 person, you have limited options. You itemize your deductions, you have $25,000. But if you're a farmer, if you do real estate or you're an entrepreneur and inventor, you have some huge opportunities to take advantage of the tax code. And this goes back to the last 2 or 3 strategies, depend on what you want to do, but there's sections in the code of like 1202. So I'm an investor, I like investing in companies, and if you tell me this is a great opportunity, I would go, yeah, it's a great opportunity. There's a little history of the tax thing. But Zeus Electric Chassis, I tried to get them here to present, but they don't know how to get the truck into the building. Up in Lindstrom, Minnesota, they built a working EV company. We did a crowdfunding raise, we did a private placement. It is a very cool vehicle. When I met with them, they were a pass-through entity. But this truck is going to be on the road, pass through in every state. It's going to create nexus and tax problems for the owners in every state. Also, if I know that I need big-time investors, if I know I'm going to be publicly traded, the C corporation probably is the best avenue. So we converted them to a Delaware C. Why Delaware? Delaware just is advantageous for businesses. Minnesota has minority rights ownership. It's a great thing if you're a Minnesota company and I'm a minority owner. It means you basically have to pay attention to me. But in Delaware, they have a conciliatory court. It's a lot better. They're organized. They speed through the process. Everybody knows and understands the law. Every lawyer knows it. So it's like, yes, I understand the corporation. I don't understand Minnesota. I've never been to Minnesota. I don't think you should incorporate there. But anyways, we reincorporated them as a C corporation. It's beneficial. Now they can be in multiple states. They pay the tax inside their own self. That truck will eventually kill people. Every truck kills people. They're building a work truck. Somebody's going to fall asleep at the wheel. Somebody's going to run over somebody. Somebody's going to hit them. That's going to have a tire that blows out. They'll be on the road. Eventually, the truck will be considered part at fault for killing somebody. Better to put that into a big, strong C corporation, do other things. We're able to create leasing companies for the battery. We're able to do a wide variety of different other things that have tax advantage outside the core product. R&D tax credit, technology, software that runs it, just multiple companies build off the core of the Zeus Electric Chassis. So,
Does the state have a cap on the amount of R&D credits they'll give out though per year?
No.
Open-ended?
Nope. There's always caps. They always end. So let me tell you, the legislature didn't meet. I didn't look at the law. Their tax credit might be gone away as of right now because there might be a sunset clause. But that one has been in existence for quite a few years. And the Minnesota, whatever the tax code is right now, Minnesota locks in that tax code and says we have parity. The federal tax code changes all the time. Minnesota does not follow it. So there's not parity, and we call it conformity. So there's always breaks in the tax code. The R&D tax credit at the federal level has ended about 35 times. It's ending now. Okay, we're starting it up again. Because it is a very good program, and they've said how many jobs it's created, how many investments it's created, all of the things that we have. Amazon took advantage of the R&D tax credit. 3M, Monsanto, every medical device that we have seen in the modern century has taken the R&D tax credit. Why? Because 2 or 3 people just walking around going, you're the engineer, tell me what you did. I'm documenting it, I'm doing that. Well, the thing is in the technology software, because code is written, you already have JIRA tickets and Confluence. It's just natural to say, here's the evidence that I have that the R&D tax credit works. And the last part is the IRS auditors are all older gentlemen in the tax credit go, all right, I do medical device manufacturing. Well, here's the software code that we wrote, that we've sold, and here's the money. Where's the product? Well, it's here in the code. And every day, this is how much was added to it. They must have been building it, and here's the revenue, here's the profit motive, here's the advice, okay. So it's like, and now we added a Spanish module that does what? Now we added an educational module that does this, and it has revenue. And now we did this, and now we bought this software, and we have to incorporate it into here, and this is what we're gonna do with it. And as you have those building and those planning meetings, you go and say, here's the R&D tax credit. One of the local companies, we'd make about $285,000 in tax credit, and it was all passed through to the owners of the company. So you get on your tax return, well, I made $80,000 and I got $35,000 in tax credit. 85 at 20% rate, 16, I'm already ahead of the game. Yep.
I mean, is there some evaluation of like, is it novel enough, or is it just, oh, I read right software and I can qualify? for
No,
it?
there are criterias and check the box. But I always say, when we go through the criteria, this is what you're doing and how you're doing. This is the product you're improving. This is what you're specifically doing. So you go through the steps, and most people can go through saying, yeah, that's what I'm doing. I'm building something. You go to the IRS after the fact going, yeah, I heard about this R&D tax credit, and I kind of think that this app that I just put in the Google store works. Oh, well, no. You got to document it as you go, have it planfully mindful, saying, put it in your business plan. I'm using 1202 stock, I'm doing this, I'm going to take advantage of the R&D tax credit. And the IRS going, well, 2 years before you took the credit, you actually said you were going to take the credit. That really is kind of a plan.
Yeah.
So it's just a matter of documenting what you have. Now, I like to talk about my corporations. So I have an 1120C, and that's Remington. They just buy and sell products, but it has a 105 plan. So I pay my wife a salary, and then she has full health care, full benefits, so anything that she wants to put in there. So if it's alternative medicine, it's covered under my plan. It's a document in the 105 plan that says alternative medicine that Western medicine doesn't truly, naturally believe in is covered under my plan. Now, I can find a thing saying this is alternative medicine that is that most healthcares don't cover it. My plan says that's what it covers. It's healthcare. And so the 105 plan will cover it. I have an S corporation I talked about, my CPA business. I employ my son. He's the technology expert. And then I have a 1065 LLC with my wife. She's an HR consultant. I always like to say I go in and break companies, and then she has to go fix them. So it's really easy. At one point in time, I fired 385 people in one fell swoop on a turnaround. And that's really tough for a lot of people to deal with. But afterwards, then, the people who existed, she gets to go fix them. So we're a 50-50 partnership in the company, and she builds that culture, morale, employees, this is what you want to do, and has all of the Gallup training and all of the best friend coaching and all the stuff you need to make a healthy organization. So it's kind of fun, but in that pass-through entity, whatever profit we have has to be paid both on the FICA. But inside that LLC, if you look at all coaching and mentorship and all this other stuff, you can deduct your life. You and your wife go out to dinner and you talk about business. And here's the business. We have entire meetings scheduled that are date nights, and we're talking about business. And now, at this point in time, meals and entertainment are 100% deductible, not 50% deductible for the last 2021 and 2022. So my business meeting with my wife is deductible. And she will tell you it's the most beneficial business meetings we ever have together, because we talk about company culture, breaking down people, what do you need to do, and how to be human. So it's a fun conversation that we usually have. So that's really the structure.
I have a question. So what if this couple scenario, one of the couple is a W-2, so an employee somewhere earns an income pay,
Yep.
and then the family or the other couple is a C Corp or S Corp or LLC. Can you invest in the LLC or C Corp and, for R&D, and then, do your date night work and kind of reduce the W-2 taxes?
Yeah, I mean, the pass-through entities can lose money. So you have so if 1040 is the individual tax return, you have a man and a woman married, he works outside, W-2, you have yourself your business loses money, it will offset the income from here. Absolutely. As long as that's proper, you have proper losses, this is in legitimate purpose for a business, you do that. You go to dinner with them.
Those losses could be dinner.
There is probably not a business purpose taking your spouse out to dinner. But if you both own the company equally, and you're talking business. Now, the first conversation that I have on almost every meeting, every coffee, anything I do is, how's business doing? How's your taxes? Have you filed it? Is the IRS after you yet? And they go, Lee, why are you asking me this? Well, we're talking business, because now that makes it deductible. And usually make it with a joke, but I will tell you that joke will list, and when the IRS says, you definitely eat out a lot with people. I said, yeah, you made it 100% deductible. And now I'm paying versus 2 years ago, that guy, 3 years ago, that guy always paid. Now I'm paying because it's 100% deductible, but I will, next year when it goes to 50-50, I'll remind him that I paid for the last 2 years. It's kind of a fun little, he won't remember that I got the 100% deduction. But those are the little rules that have happened. And that's when you have multiple corporations and multiple structures. So when you finally get down, a wealthy individual has multiple, every real estate's their own LLC, every, their own corporation. They even put their own house in a trust. They do multiple vehicles and multiple tools to protect their assets, to protect that. So if something bad happens, they diversify their wealth, they diversify their corporations, they can just shut that building down, they can shut that one down, they can do different things. And that is just making sure, the ultimate is that you have people who have been there and done that. When people come to me and say, my accountant really screwed up, it's like, no, you have a transactional accountant. Build a relationship with an accountant, build a relationship with an attorney, build a relationship with a financial planner, and build mentors who have been there and done that where you want to go. Because those are the people that are going to say, oh, you're starting to do business in Illinois. You need to figure out what your strategy is because they will come and tax you. So you might as well do this right the first time. And so just finding the Sherpa that's been there, done that, is going to save all of your time. My goal is to educate 20,000 tax preparers, to keep educating them on all these rules, all these things that are coming out, so they can work with business owners to make sure the government gets less than they deserve, but everyone pays their fair share because they're knowledgeable about all of these strange accounting classes. So does anybody else have any questions? I know we're running out of time.
Just so that I understand the example you were talking about, can you break down how these three entities relate to each other? So
Yep.
You and your wife own the LLC together, and
Yep.
you're both executives at the corporation?
Yep. So the 1120C Corporation, it is 100% owned by me, and it buys and sells things. Computers, copiers, anything under the sun that you can buy at a discount and sell. She is the only employee. She is the general manager of that corporation. She gets paid a salary.
Got it.
And she has to make sure that the one rule that she has to, the pay has to be in the copier machines. That's all she has to do. That is the one requirement of success for the job. Because she puts printing, she puts that high gloss paper in there, and I'll run a tax return and do your tax return on high gloss paper, which really annoys me because that was about a $50 cost in tax return work. So that's her number one job, and then she gets paid. But because I have a 105 plan, all my health care is in this. Now previously, when health care was cheap, I could open up my own business, R165, I'd go buy health care on the market. But now with high deductibles, all this plan, pass-through entities don't have the discounted deductions that you want. There's another solution. So now she has that. So the 1120S is my LLC, my tax return corporation. You cannot be a CPA and own a CPA firm with really non-CPAs in it. You can, but it's a pain in the ass, and they got to get blood tested and make sure you do it because they want to make sure you're ethical and a real CPA. So I am. So I created the CPA firm. The CPA firm just keeps me legitimate for me doing tax returns and have a PTIN number and all that inside of this corporation. I get to bill based on tax returns. I work with other tax preparers who give me work to review their tax returns, and then high and specialty deals. And then the 1065 is my fractional CFO work, when I say fractional CFO work, I fraction things. I like to say I break it down. Here's how we're going to go make money, whether it's turnarounds. Here's how you improve the business and the profit. And then my wife does the HR side, because no matter what you do in any company, even if it's self-employed business, it's all about your people. They're motivated, they're making money, they understand the big picture, and that's what she does.
Time's up. We gotta get the next crew in.
All right, thanks.